Hey guys, really awesome opportunity here today, October the 7th, 2024, a day or two before Hurricane Milton. So I will always remember this interview because I was thinking about leaving town and decided to stay here for this one. So if I die, it's Deloitte's mistake. No, just kidding.
Thanks, Gary.
Here I have Rob Massey and Amy Park from Deloitte. I'm really honored to have both you guys here. I met with Rob maybe 2 or 3 weeks ago. We've been looking at some very interesting projects in the digital asset industry. And when I met him, I thought his story about how a large corporation the size of Deloitte comes about to enter into a new industry. And I know you guys had some particular things you wanted to discuss, but first off, really, really appreciate both of you being here. Amy's in New York today. Rob's in. You guys getting any feedback?
Teeny bit.
Rob is in, let me see if I can fix that. Rob is in San Francisco and leads the digital practice. I think that's correct, Rob. Leads the digital practice for Deloitte. Why don't we start with Rob? Rob, if you could introduce yourself, tell the audience what you do for Deloitte and your focus, and then we'll move to Amy, and we'll just kind of roll through what Deloitte's role is in this space. Thank you, guys.
Sounds good. Thanks, Gary. So as you said, Rob Massey, I'm a partner at Deloitte. And for the last 13 years, I have focused on blockchain digital assets across the ecosystem. I lead our tax practice as it relates to all things blockchain digital assets. But it is, like all things, when you have this much tenure, I tend to get involved in a lot of things. And we work collaboratively because it's a really hard topic. And it started to become more real and much more enjoyable when Amy brought the accounting and audit and controls lens to the equation, and much more fun.
Well, thank you, Rob. That was a great intro or segue to me. Hi, I'm Amy Park. I'm a partner in Deloitte's audit practice. I spend a lot of my time working with digital asset companies, and not only native companies, but also companies that are just getting involved and interested in the space. I spend a lot of my time doing technical accounting, so debits, credits, FASB accounting rules, IFRS accounting rules, all that stuff that usually people get really bored about, I get really excited about. And this is a space where the accounting rules are a little bit hard to understand. Some of the nature of the transactions are a little bit nuanced and different. And maybe the accounting rules that were made many years ago, we didn't necessarily contemplate these types of transactions. So I've had the pleasure to work with many companies in terms of thinking through some of the accounting, internal controls, as Rob mentioned, and financial reporting aspects of how do you actually get these on our financial statements, disclosures. I spent a couple of years at the FASB. So they are the board that creates all the accounting rules in the United States. And that's kind of where I got my foray into digital assets. And so we'll spend a little bit of time today, hopefully, to talk about some of the new accounting rules that have come out from them.
Yeah, Amy, that's actually a great place to start. Before we do that, maybe just a little background, how much legacy, when I say legacy, I mean non-digital assets, 20th century analog transactions, whether it's a sale, a buy, a rental, a partnership. Have you guys spent much time in the legacy world? I think I know the answer to this, but and the transition from legacy to digital, because I think it's really, really important for people to understand these are very different industries and they're measured differently, right?
Yep. More and more of our time, of Amy and mine, the broader practice's time, is spent with legacy companies, analog companies, starting to say, we need to be on this journey, or we need to advance our positioning in the journey with digital assets. And then they come to us because their first reaction is a little bit nervous. There's a little anxiety, and then our job is to calm them down and say, this is, what's happening. We talk them through the tax, the accounting, the boring stuff, the risk and controls. So I think it's a very slow, warming of, traditional companies getting into the space, but then it just takes a little bit of a little bit of excitement to light a spark and say, this is how it transforms the business. And then they get really excited, but then they again get nervous about, what about tax and accounting? And you see that play out a little bit now with not just investing in digital assets, but using them in the business. How do we engage with decentralized protocols, or do we need to have our own layer 2 as is coming of age, right? And how to build stuff on top of it. We have employees that want to be paid in crypto. We have vendors that want to be paid in crypto. We have customers that want to pay us in crypto. That's stuff happening. And so how do you get your head around that? How do you get your risk and control set up? And that's where we come into play.
Yeah, the FASB term is the one what Amy mentioned was the thing that kind of triggered me. I think that's the term nowadays. And you said, hey, it's an organization. Why don't you just discuss a little bit about the legacy piece of this, Amy, and how FASB kind of had a problem fitting itself in the digital world?
Yeah, so the FASB is, that stands for the Financial Accounting Standards Board, and they are the board that creates the accounting rules for under US GAAP, which is US Generally Accepted Accounting Principles, which the SEC has adopted as the governing body that gives authority for public companies. And then the FASB also provides accounting rules for private companies as well as not-for-profits as well too. So super critical in the accounting world because they're the ones that basically create GAAP. And then it's up to practice to be able to interpret and apply GAAP. And I say GAAP as in the generally accepted accounting rules. What we saw over the last, I'd say, 4 or 5 years is early stage when maybe not so many companies were actually holding or engaging in digital assets because maybe they were nervous. It wasn't as mainstream yet. It was mostly held by retail customers or retail individuals. There wasn't that big of a need of trying to figure out what do my financial statements look like and how do I account for this? Because, you and I, maybe we don't make enough of that money, but most people don't have their own personal set of financial statements unless they're in a different category. And it wasn't really a big issue. And then as we started seeing more companies adopt, whether it was wanting to hold it as a form of investment or starting to use it in their business, like Rob was saying, or we also saw just native crypto companies where it was the currency. I'm going to say quote unquote currency. We don't like using that term with crypto, but it was the currency of their business transactions. There was more of a need to figure out the accounting. And under the legacy world or, under the existing accounting rules, what ended up happening was because these types of assets didn't fit very well into where the existing accounting definitions were. Like if you look at the accounting definition of a cash equivalent, if you look at the accounting definition of inventory or financial instrument or a financial asset, it didn't quite necessarily meet any of those rules. And so you were kind of stuck with considering it as an intangible asset because it lacked physical substance. Literally, the GAAP definition of an intangible asset is something that lacks physical substance. So by default,
what else falls into that parameter?
So if you think about intellectual property, patents, customer,
wow,
right? Yeah, exactly. That's eye-opening.
Wow, that is eye-opening.
Imagine trying to account for IP the same way that you account for something that is actively traded, multiple exchanges, moving around very frequently. It just didn't really fit that accounting model. And so in a nutshell, that accounting model was you basically account for it at cost, which is what you acquired it at. Sometimes you're internally generating that kind of stuff, right? So there's a cost accumulation type model. But if you were to purchase it, potentially what you got it for that day is fair value. But then you're not really in the business of buying and selling and trading, your intellectual property, right? You usually hold on to it. And so you keep it at cost and then you evaluate if it's been impaired. If something triggered it to have gone down in value, then you write it down. And obviously, if you kind of follow that for a digital asset like, let's say, Bitcoin, it just doesn't really make sense. And what companies were really forced to do is basically keep writing the asset down whenever there is some observable price, which could be 70 times during one given day. And then you never get to write it up until you actually sell it when you realize it in a third-party sale or transaction.
So it's only an impairment on the way down until you liquidate it, and liquidation is at the liquidation event, up or
Yes,
down.
that's right. So if it goes down tomorrow and then goes back up by the end of the day or the next day, you still have to keep it at that lowest value. And so it ended up just really leading to very difficult accounting on multiple levels. So one, if you think about users of the financial statements, they're like, I don't even understand what value is being attributed into these financial statements, because I could hold, it could be on the books for, 40,000, but today's value could be 70,000, et cetera. So not really useful for users of financial statements. Very operationally difficult for companies because they have to basically keep tracking. And tracking is hard when you do a lot of transactions, because your cost basis, if it comes in at different times of the day, different cost bases, it just makes it very difficult. So operationally, it's really costly. And then the other thing is many companies, from a internal reporting perspective, their management, they don't want to know what the lowest potential value of the Bitcoin was that they held. They want to know, what can I use? What's the value today? So companies have to oftentimes create what they call GAAP books and then management reporting books, so that management can see versus what's in their financial statements. And it just led to a lot of challenges. And particularly if you think about investors, if they're trying to compare two companies that both hold the same amount of Bitcoin, depending on when they bought, it's just very difficult to see. So for that reason, the FASB ended up adding a project onto their agenda, and they moved towards more of a fair value type of model, which basically you write it up and down. Now, there are certain caveats.
Can I ask you a question? So rather than getting into the very details of it, how long did it take to convince the FASB? Because when you said, hey, this is an independent organization, I forgot that. How long was that? A big journey? I mean, Saylor, MicroStrategy started pushing the whole issue of, hey, you cannot just make me take the lowest, worst price in a year, and I get no value for the upside. Was that a struggle? And did Deloitte play a role in helping FASB come to understand this is a world and it's actually going to happen? Because I think until about a year ago, everybody's like, is this really going to happen? Was that y'all's experience, that most players not really sure, but we're putting our toe in the water? I mean, you guys put your toe in the water deeply.
Yeah, I think a lot of people weren't sure if it was going to come from the FASB, because the FASB, I can't remember my dates, but they had a board meeting where they ultimately decided not to add a project on their agenda related to digital assets. And that was probably, I don't know if it was before, Saylor and his team ended up making their big investment, or if it was shortly thereafter. But at that time, it didn't meet the criteria for the FASB to add their project. They can't just add every single thing that people come in and ask for. They have certain criteria, and they go through a pretty robust
roadmap
process to figure out, is this worth it? And at that time, I think they didn't think it was material. Material meaning would impact a lot of companies pervasive across the industry. And so they had actually voted 7-0 to not add a project.
Wow.
And then what ended up happening was, part of what the FASB does is they basically, they call it an agenda consultation or an invitation to comment. They basically ask the world, hey, what do you want the FASB to work on? What's important to you? What's painful for you? What's, not meaningful? And, how can we improve? And when they did that, they asked a specific question about digital assets, and they got a lot of requests. I can't even, I think it's in the hundreds of requests, which is pretty big, because I'd say, how I started my intro, not everybody gets excited about accounting. Those invitations to comment, not, Deloitte provides a letter, so do all the other big four firms, the AICPA does, but outside of that, it's pretty rare. But they received hundreds of letters. And I think a lot of that was due to maybe some of the folks who were vocal in the space about trying to get accounting change. And then
I think there were a lot of people doing things that in size that people didn't fully understand. This whole topic, it's amazing to me, because I told Rob, I think about I don't know, 6 months ago. I said, Bitcoin has made accounting and tax sexy.
Oh,
Like, and very complicated. Like, it's more complicated than it was. You guys have roles forever and ever because of digital.
Yeah.
We like to think so, right?
Well, I mean, like you're like, the role that you played though, Rob, the story, I think the story that about Deloitte's entry here, I've made you tell this story before, but for people that don't understand see, to me, this is the indicators of the players coming into this market is far more important to me than the price. And you guys have been doing this a long time. You see the quality of players coming here. Everybody looks at me and goes, hey, should I buy 63? And I said, I think you should go study Wall Street and ask yourself, why is every very smart company, how many people are working at Deloitte under digital?
Yeah.
Nobody knows this. See, it's becoming an industry, a real industry.
Yeah. And our practice is about 2,000 people who spend some segment of their time working on digital assets, which is great. That's globally and spanning all of our different functions. But yeah, no, it's a thing, but it's because we believe that it is transformative to 100% of our client base at some point. So that means we need to pay attention to every example we can to make sure we're learning from it, we're sensitive to it, we're helping all of our clients. If you've got somebody that's willing to take a step and incorporate digital assets into their business, then they need us to have that experience and step up and tell them how to handle it. Now there's not 100% coverage on the rules out there. A lot of times we have to make guesses and build positions and sometimes talk to the regulators, but it is hard, to your point. In the rules that Amy was talking about from a GAAP side, tax rarely would line up with the GAAP treatment. There's certain companies that do. Usually it's two different things. We talk about, here's the GAAP treatment, here's accounting, and here's what we do for tax. And that also comes into the financial statements. So things like the impairments in the old rules, tax would not follow that. And then we would have a separate calculation. We build that into the financials. Now, fair value adjusting certain assets, that is not going to be a taxable event either. Some companies, yes, but very few. And so then we have to watch that flow all the way through the financials, as well as getting into the different basis tracking methodologies and valuations and the rest. So yeah, it's hard. And if companies are going to take that step, they've made the determination it's worth it. Now let's do it right. Let's make sure the representations are there throughout their books and records, and make sure they have a quality product in their financial statements, and they've done the right thing to withstand exam if the IRS comes knocking and saying, how are you treating this? Are you doing the right thing?
Sorry.
Go ahead, Amy. No.
That's a really good point about like the differences, because I do think there's a little bit of sense of nervousness related to the space. And so when companies come to us and other advisors, they want to make sure that they know what they're getting themselves into. And sometimes what they're getting themselves into are the blind spots that they don't realize. Like they don't know to ask the question of,
right,
oh, Amy's stupid rules on impairment, what do I have to do for tax? But it's important that they talk to the right advisors that can basically say, hey, when you do this, make sure you think about all these other things, because in a new space, people don't necessarily know to think about everything, right? It's like what's scary is the things that you don't know. And when you don't know, you can't ask the question. So you need someone to tell you, hey, make sure you're tracking it this way, or make sure you know that what you have to do for an accounting perspective may be different from what you need to do from a tax perspective. So I think that's one of the things that at least has been eye-opening for me and for many of the companies that I work with of, oh, I'm glad that you've been able to share and show me what those blind spots are.
Well, and you guys you're such a big practice that you see it all. So right. I remember walking in 4 years ago to a lawyer, and I had never been in this situation before. And he looked at me, 72 years old. He said, do you have any more questions? I'm like, not any good ones. And he said, huh? I said, look, I've never been here before. Why don't you tell me the questions I should be asking you? Because I'm quite certain I'm so ignorant that I have no clue what to, like, I'm going to get hurt by what I don't know. and having you guys seen a lot of stuff. You've seen stuff. You're like, no, thank you. We're Deloitte. We're not going to even deal with this, which is good to know. But it's also good to know about how big players, real players, players that plan on being here for a long time are actually professionally approaching this. And I don't think very many people up until about a year or two ago took audit, forensic audit, tax, accounting very seriously on crypto. Is that fair?
It was a relatively small subset, but there was enough that took it serious, and they took it real serious. And it was important to us.
Proactively or reactively?
No, proactively. I mean, if you've ever had a foot fault with a regulator, you get pretty proactive.
Oh yeah, you get proactive after.
And that's what and that's what inspired the tenured leaders and entrepreneurs to say, you guys have done this a little bit, can you help? And the answer is absolutely yes, because in order for us to be able to tell the large brand names what's coming next, how to see around corners, what are the patterns, we have to engage. You can't it's too hard to figure it out just before there's a transaction or before the eve of a deadline or when you're in the middle of a deal, right? We've watched this train moving for a long time, and we knew it was coming. And so you'll find that Amy and I and other tenured practitioners in the space, we're going to take advantage of opportunities to help companies so we can see the next thing, whatever's the next iteration in this space. We want to participate and engage so that we can live, not just read about it. You want to be able to live what's coming next, so that then we have an experience point of view. And then you're going to see the patterns emerge. Okay, now we know what that is, because it's like building blocks. Every time there's something new, then that's the next thing. Then the next iteration builds on that. But blockchain digital assets, it's been an evolving continuum for the last at least 13 years that we've been involved, and even a few before we did get involved. But it was very apparent to us with this level of complexity and building toward new and innovative transactions. It's evolving, and it's all iterations upon iterations. That means we have to live it to get it right. Even accounting rules, even the tax rules. This goes way beyond the technology. This goes way beyond the business transactions and the deals that are being produced. We have to get into the minutia of the rules. And then Amy and I and our colleagues, in broader regulatory considerations and risk and control frameworks and the rest of it.
Yeah, Amy, it's amazing because we all share, hey, this is what we'd like to talk about. And I was writing down some things earlier, most of which didn't include y'all's topics, sadly. But I understand. I think the audience is not really aware of what is available to them. And also, I find it a little conflicting. People are saying Bitcoin's going to be worth $250 to $1 million. I'm like, then why aren't you doing your business with Deloitte? Why are you using Billy Bob down the street, a piece of software for $100 a year? If you think Bitcoin, you have 5 Bitcoin, you think they're worth $1 million, why are you acting like this is a Volkswagen? When you buy a Bentley, you have to buy either a driver or somebody to take care of the car. You don't bring it into the, McDonald's car wash and take care of your Bentley this way. To me, this is really important because you have a bunch of young people who have come in. You guys deal with a bunch of institutions, but I think there's getting ready to be a lot of families and wealth here that don't understand this asset well enough to understand how to protect yourself from the future. What Rob was saying, living this it's not a theoretical exercise. I have to believe there's going to be a lot of audits on people holding digital assets, right? And I don't think anyone's ready. I think a few people, I'm ready. I think I can handle any audit in the world with the help of, you and firms like you. But let's just talk about the mistakes people are making. I think part of that is the professionals they have placed around them. Correct me if I'm wrong, but you can't say this is worth $500,000 and then treat it like you're doing taxes on your house. Is that, Amy's smiling and laughing, but I mean, Amy, I'm just straight up about this. I think this is a very different, at Node 40, we've seen people with $400 in 8 wallets. That is $400 spread across 8 wallets. You can't send that person a $5,000 or $20,000 retainer. And my point is that person should not be in this market. that person is going to have to spend real money to stay in this market and keep and retain the money, right? Button it down with people like Deloitte. I think this is massively important. For the first time in my life, I'm moving accounting firms. I've had a couple of wives, I've had lawyers, I've had doctors. I've had one accounting firm. So I'm beginning to see digital is now motivating me to do things in a very different way. Can you speak to that? Is that some of the mistakes, or what are the mistakes you see on a high level of people making?
Well, maybe a couple of things I can start, Rob, and then you can chime in. I think a lot of people think audits are audits, but sometimes the audit firm that signs that opinion does have more weight than others. And we've been seeing that a lot more with maybe companies that are wanting to go public, where they want an audit firm that basically has gone through the process before, knows what how to deal with the SEC and what all the requirements are. And so we do see many companies who move from maybe a smaller audit firm to then, maybe a Big Four or a mid-tier firm, but a firm that has more resources, I'd say, number one. The other thing maybe I'd like to share is that not only, Gary, is it important for the company, but it's also important for the company's customers. And we're seeing that a lot more. So a good example is, many of the clients that we deal with on both the native crypto side as well as the institutional side, when they want to get involved, when the institutions want to get involved, they want to know that the company has the right internal controls. You say people don't focus on tax, they don't focus on accounting. Well, internal controls, they really don't focus on. We're coming up to, it's 2024, like 22 years maybe that the Sarbanes-Oxley Act has been out, right? And so think about the internal controls that relate to digital assets and digital asset type transactions. Those are even more nuanced than just general reporting, operational internal controls. And what we're seeing a lot of companies who want to get engaged is they want to know that the controls at those native digital companies are up and running, designed, implemented, and operating effectively. And a lot of that comes from issuing what we call a SOC report. Several years ago, SOC reports didn't exist in this industry at all. But now we're seeing more and more companies engaging and putting those not only controls in place so that they can issue those SOC reports, but then engaging the right audit firm to be the ones who actually issue it, not because they want to do what's right, because their customers are demanding it. In order for most public companies to get engaged with, for example, a digital asset custodian that's going to hold their digital assets, they're going to want a SOC report. And that SOC report, it can't be issued by Amy Park CPA firm. It's got to be issued by a well-known accounting or audit firm. Otherwise, they don't necessarily feel like those controls, or that the testing has been done appropriately. So we kind of see it on multiple levels. I don't know, Rob, if you have anything to add.
I mean, yeah, from a tax perspective, everything that Amy just said, and then you think about how do we layer those, controls into decisions we're making on the tax front. So, you asked about foot faults, Gary, and where can people learn? Start with the basic understanding that it looks like I can't see anybody more. Start with the basic understanding that all digital assets are something, and you don't know what they are exactly. They may not fit into a traditional framework, but you always start with that key question: what's the thing? Right? We have, how many 10,000 different flavors of tokens now, I think the last time I looked, and they all represent something slightly different. And you got to put the tax lens on it, the accounting lens, and the broader regulatory lens. And by the way, that may change per jurisdiction. So you say, what's the thing and why does it matter? And pause. And when you ask what's the thing, test your confidence level. Pick a stable coin. Stable coins, a lot of them, they track pretty closely to $1. Guess what? It's not money. It's something else. It may be a digital representation of $1, but what does that translate to? Is it a debt instrument? Is it a security? Is it a bailment? What is that with the tax lens? And then you say, if I'm using a stablecoin in a transaction, What does that do to the character of the transaction? What does it change the nature of that thing that I've built? So you got to put
does it change it? Because
absolutely, it's something different. You think about
This is just Amy said, hey, look, we don't like to use the word currency, but really it is a currency, right?
It is used like a currency. It's used as a method of payment, but the tax definition of money, the tax definition of currency is that which is issued by a central bank. Stable coins.
Oh, is that right? For sure.
Absolutely.
Wow.
So even when you look at certain countries around the world that say Bitcoin is legal tender, that doesn't mean it's currency. That means it's legal tender, two different things. And so you say, pause. What is this thing that I'm transacting with, and why does it matter? Am I crossing borders with this transaction? Okay, let's put the cross-border lens on it. Guess how many tax treaties around the world address crypto? That'd be 0, Gary. Right? So we have to say, well, what does it default to?
So much opportunity.
It's general property of some kind. And so now what do we do with it from a character standpoint, from a sourcing standpoint? Is there withholding taxes? What do I do with it? And by the way, if there is withholding required, not many government, state, or federal at the moment accept crypto as a mode of payments. Now you've got operational considerations there. So pausing to say, what's the thing and why does it matter is critical. The other big mistake that people make is that they think that, oh, I'm just doing something with it like I've always done. I've put it there, I've moved it, I've entered this DeFi platform, I've done whatever it is. You have to pause and say, the basic assumption of the IRS, most regulators out there are going to say, if something happened on chain, there is the chance that that is a transaction, which is a recognizable event. Now you have to say, well, what does it represent? The presumption is that it's something happened. So you now need to make sure in your books and records, you have a clear articulation of what that transaction represented. You're like, hey, I just moved it from this hot wallet to cold storage over there. I just moved custodians. Great. Write it down. If you say, hey, I just moved it onto this DEX. I'm just participating in this liquidity pool. That's all I did. Hey, guess what? You may have had a taxable event. So if you're a crypto OG and you've had ETH since $8 and you just entered in a liquidity pool, you may have had a taxable transaction. Maybe. Understand what is the nature of what you entered. How did you do it? Now I'm going to put the tax lens on it. Amy's going to put the accounting lens. And then we figure out what is the complete narrative. What do you need to research? What do you need to write down in your books and records? Because it's a thing. Still evolving, lots of really cool stuff out there, but you really have to pause and analyze every leg of the journey when you're engaged.
Can you see people doing this that aren't spending 80, 70% of their time focused on this? I mean, I see people trying to like move between legacy and digital, and they're not as smart as you guys. They don't sound like they're not as confident is what you're talking. I suspect if I brought up a couple of tokens, like I know people that theoretically understand crypto, but it's very clear to me they own none of it. And the theoretical understanding, your point, hey, you have to live this. When you have Bitcoin or some other digital asset and you've actually used it, it's really different. It's the most different thing I've ever used in my life, quite frankly. It's so liquid. I'm talking about Bitcoin and the very top of the food chain on the digital assets. But can you see a part-time player actually? I see that this is a mistake. This is where I'm getting to. I think this is not I had a friend of mine once who makes $7 million a year in a business. He spent an hour with me at my home. I got him all jacked up on crypto and the digital. I mean, I think Bitcoin's an industry. It's not just a thing. And the guy's walking out my front door and he said, okay, I'm going to allocate 20% of my time on crypto. And he's walking out my front door. I'm like, no, bro, come back in here. Okay. Don't do that. Bitcoin, crypto is not a part-time exercise. You're going to blow $7 million. I think I gave him great advice. My point is, you guys, Rob, I don't even think you do any legacy stuff anymore, do you? You're so
I don't touch fiat.
Yeah, exactly. So makes a big difference, guys. I'm going to recommend to anyone, assess the team you have around you right now and ask yourself, can they stand up to the if Gary Gensler walks into your home tomorrow morning, could they stand up to the SEC, for instance? I want somebody on my back that can stand up to anyone. One, I'm not doing anything wrong. I'm legit as it comes. I think another mistake people are making is they're not keeping records. Exactly what you were saying, keep a note. Oh, wow, no, it's digital. I don't have to keep notes. Really? Well, 20 years from now, my kids are going to inherit 1,000 Bitcoin. And the first question is going to be, hey, where'd the funds come from? And they're not going to know. And for me to have a little note in my Node 40 thing, here's my seed phrase, here's my storyline. It's got Deloitte's name on it. Quality earnings. No one's even talking about quality of earnings on traded books for risk management on crypto. I think you're going to have a massive quality of earnings business. Guy's got $100 million of Bitcoin. That is a business now. Like, that's not just a thing. It's a business that's going to generate tremendous opportunities, and there's going to be movements that aren't liquidation events. They're just movements.
Yep.
Right? So I mean, the way I was in Wyoming at this symposium, and these people are thinking 8 and 12 years in advance now. It's a very different Bitcoin industry than I've ever seen. Right? It's normally, hey, what's the price? What's the price? What's the price? This was like Citibank going, yeah, we're thinking about what happens in 8 years. Wow, that's big. So I think the investing community, people like me, really need to look around. And in fact, maybe that's the question. Let's say a guy thinks Bitcoin's going to $500,000, and let's say he's got a couple of them or more. What do you guys see as best practices after they've hired Deloitte? What else do they need around them? And what part of the puzzle is Deloitte solving for them? And what type of customer? Some of the people that watch me may look at Deloitte and go, I can't afford to go to Deloitte. And maybe the answer is, hey, maybe you can't afford not to go to Deloitte. But what type of professionals would you see someone with 2 to 1,000 Bitcoin around them? What do they need to put around them to make them battle tested for undergoing the battle that they're going to undergo one day? I think every crypto player is going to be tested.
We do, Gary, try and put out points of view. And when we're studying something that's really nuanced and hard for a big company, we try and if we think it's a relevant industry trend, we try and share that which we've learned so that people can learn about it. And I'm not talking about deep technical memos. I'm just talking about taking a topic, whether it's investing or using it in the business, or if you're just an individual thinking about it, what do they need to worry about, whether it's a tax, accounting, controls, or whatever it is. And so we do publish our points of view out there and try and share it to just help people understand it. And then, all of our contact information is there to go further. We do also go a step deeper and put out, treatise-like materials that focus on tax and accounting for more of the businesses to focus on. Because just like you say, where do you start?
Yeah.
We'd like to be the source of a lot of credible resources that people can read. So the answer isn't just, oh yeah, I talked to a guy. No, that's not that's not where you want to start. And
yeah,
so
I've lost a lot of money talking to guys.
Yeah. How do you test it?
Well, they probably made money, but me listening to them was a mistake.
But you'll see us, get a little bit nerdy in some of the stuff that we publish. And then we also put out points of view that are a little more digestible. And we've done that for a long time. And it's all sitting there on, Deloitte.com is a big website, but there's a very crypto specific section for all the things that we do, blockchain, digital assets. You'll see Amy and my name attached to most of those pieces, going exactly to the questions you asked.
Amy.
I think also, Gary, we have a lot of companies who come to us and they say, hey, we want to be audited by Deloitte. And one of the things that we always say is we offer a lot of different types of services. Audit Services is one of them, but sometimes that's not necessarily the best service for many of the companies. Like, the last thing we want to do is to sign up to be an auditor or their auditor and then not be able to issue an unqualified audit opinion. Like, that's like the worst case scenario for everybody. And to your point, a lot of the companies who are in this space are younger, newer, maybe not as focused on some of those things. And so a lot of times we just help them from an advisory capacity of like, what do you need to do to get audit ready? Like, how do you need to think about the accounting rules, and how do you need to think about the internal controls and the tax rules, which some companies choose to go down that path. And that goes from small to large, where it could just be, we get on a phone and we talk about what you want to do and some of the things that we'll highlight for you to focus on. And then you can go, figure out who you need help with on different aspects. Or sometimes we do it from soup to nuts of, building out transaction flows, designing, internal controls, et cetera. So there's a lot of different ways we can help. I do realize that sometimes companies or people can't afford to, services that we provide, but there's a whole gamut of them. And usually we come to a place where we can, work with companies and people about what's the best for them in their relationship with Deloitte.
When we find management teams that we enjoy with innovative ideas that we respect, we try and find a way to make it work. And that means scaling our level of advice and deliverable and conversation to a manner that is palatable to them. We find that, it's the early stage companies, ideas that we believe in, when they scale, it scales big, it scales fast. And the advice that we give on the front end of a transaction, that's when they need it most to avoid the pitfalls. So we again, when we find people we respect, we try and find a way to scale down to what is needed at that stage of the transaction. Now, we can't work with every startup company in the world, so we do exercise some discretion, but the team is very focused on what's coming next. And when we find teams we believe in, we try and find a way to make it work.
Yeah, you're really big on character. Every time I've ever met you, you're like, hey, I want to know the character of my client, the character of my friend. If the character's right, I can get to step 2. But if the character's not right, and part of the character, I think what these guys are saying, well, I know that they're saying this because this is my experience. The more you button up early on, it shows your counterparty, hey, you're taking this very seriously. If you want to sell your company one day, having a bunch of money sitting in a bank account may not bring you the kind of exit you want without people approving of how you got there. And I think this is the point I'm trying to get to for many young entrepreneurs. I've been so guilty of being, what's the word for it? Maybe stiff or tight with my money to advisors, right? I think I'm going to go to the second guy, the less expensive guy. That may have actually suited me well in the old world. I don't think it's going to suit you well in this world. I think you got to pick some experts because I don't think there's very many of them. So the guy with the most information and the best ability to articulate the positioning is going to win this game, right? And that's why I keep saying, hey, if you think Bitcoin's going to be worth $500,000 or Ethereum's going to be worth 8,000 and you've got any of it, I think you have to look at that. You just might have the unfortunate responsibility to actually hire up because you're fortunate enough to have a position that's now very, very meaningful. Mm-hmm. In fact, I would say life altering. And all I have to do is look at the last 14 years and realize very few people have retained lots of money in Bitcoin. And this is a very important point. I continue to say it. I offend people, but it's because they did not prepare. Roger Vere's in trouble because he underestimated. He didn't even buy his own story. Otherwise, he'd had his accounting done properly. Really. Like, it's just that simple, right? I've made so many mistakes in my career. And it's, I wasn't preparing for that future event. I was living in the past. To your point, you got to live the life, right?
One of the things, to your point on advisors, it's rarely just one. And if you're using a variety of advisors, and you want to use the right specialist. What's different about this space is every once in a while, you want to get your advisors together. Those who we've seen take this real serious, it's an innovative business model or a transaction. Sometimes it's a family office. You get them together so we can hear each other talk. We can hear what one another cares about, and we can iterate with you in the boat. Now, sometimes it scares people off because you got too many faces around the Zoom or sitting around the table logging hours and all this. But every once in a while, get everybody together, we see frequently that we're able to solve unique things or bring a level of depth or reduce a risk or come up with a new idea that would have been really hard if we're all just kind of siloed and doing our own thing. And so the collaborative nature of advisors in this space is different. It's not like legacy transactions where you say, okay, I'm going to go to so-and-so for X advice. They know what everybody else is going to do. I just need them. Not the case. Here, it's different for everybody. And so you see actually advisors coming together and collaborate more. That really is a big differentiator for the hard transactions and people that want to take this real serious.
Amy, you got anything to add on that? Because I think it's a huge piece.
One of the things, Gary, that you also mentioned before about if you hold a meaningful amount of Bitcoin, I would also argue that even if you don't hold a meaningful amount of Bitcoin, the fact that you hold Bitcoin, there's just more eyeballs on it. The regulators and everybody is just so much more focused. And so before you'd have this concept of, is it material or not? If it's not material, who cares? If it's material, I completely agree with you. Like, I like your Bentley example. But even if it's not material, there's just so much focus on it by everybody that you got to make sure you get it right. Like you don't want that thing to be what's, going to be a problem. So that was one of the things that you mentioned that I was thinking, hey, it's also important for those that are not meaningful.
Yeah, no, you're totally right. Because just if you don't have a meaningful amount, doesn't mean you're not going to get audited.
Right.
If you got 13 wallets and you happen to hit the list, I mean, the U.S. government does not have to make money on your audit. Mm-hmm. It's not a commercial thing for them. Okay. They're sending you a letter. And this is where I just think some people are very, very ignorant. I don't think naive. I think it's just downright ignorant. It is your responsibility to respond to an audit or any letter from the SEC or the U.S. government or federal authority. Like, it becomes expensive the moment you get the letter. And if you think you're going to self-represent yourself, like you have 3 people here, they'll short the hell out of you right now. Like, give us your social so we can short you because you're not going to survive that, right? I mean, I'm sorry.
It is pretty painful. IRS exam is painful. And to your point, you do have the checkbox now on all it's not just the 1040, but it's all the business returns. Do you use crypto? It's sitting there. And yeah, the instance of exam are alive and well, and it's hard. And remember, they don't have to, once they have, your addresses, they can go and look at whatever activity has been out there. They don't have to issue questions anymore. So if on-chain transactions are transparent to everyone. And so exam activity is different. The reconciliations are harder. Contemporaneous documentation is a very big deal. And you want to have buttoned up books and records to a very heavy extent. And it starts, again, this is where we collaborate a lot with the accounting side and the tax side, making sure that we're building the right level of documentation that serves everybody's needs.
What do you think the minimum it costs to go through an audit? Not your fees, but once you get the letter. No, I'm doing this for the 28-year-old kid who ended up with 10 Bitcoin at $300 and he doesn't know what to do. I think there's a lot of stories like this. He just doesn't know, or he got convinced 5 years ago. This is the reason I'm asking. Hey, I lost my seed phrase on a boat. No, they don't care, dude. They're still going to ask you questions. Like, that's not going to get you past an audit. That's where I'm trying to get to.
Yeah, I mean, it's hard to put a number on it, but you would say is if you don't have good books and records, then the default position is that every transaction that they see on chain is going to be deemed a taxable transaction. And if you don't have the support for the tax basis in that asset, which is the burden on the taxpayer, right? If you say I bought the Bitcoin at 10 grand and I sold it at 60, then you have a $50,000 gain. If you don't have the support for the 10 grand, then you now have a $60,000 gain. That's the difference. Books.
That was my point about, hey, where did he find the money in the first place?
That's your responsibility. So now, and this is what the agents are saying is saying, hey, chart for me, trace for me the history of the transaction flows of that digital asset through all these different hops. Tell me what those transactions were. I mean, that's the kind of questions we're getting, and they're not wrong. It just means that they can't go back to a bank rec anymore because too many of our transactions never go back to a bank.
Correct.
So now you're doing lots of different reconciliations out there using people like, Node 40 is a great example, right? Like how do we build the books and records? How do we build the documentation so that on-chain data or that which is on a platform or custodian then matches your own books and records? Now you have the narrative. Now you have the support, which means your exercise, your journey under exam is going to be much more graceful. And go ahead.
You mentioned Node 40. I hope we've done the right thing. Our thing was, and I want some feedback here. Our thing was, it was mostly my thing actually. After my accounting firm told me, "Hey Gary, you moved, you owe $700,000 to the U.S. government." I was like, how's that? Because I've never sold any crypto. They saw Coinbase to Coinbase Pro as an event. And as soon as I gave them the Node 40 stuff, they were like, oh, that's not an event. So that's the first thing. I was like, oh, wow, there's languages out there that can pull away from the experience of what actually happened and give it to a professional without them understanding what Dogecoin is or a Uniswap or MetaMask. They don't have to understand that. It's a P&L, dude, with a bunch of little tabs on it. And the more drill downs you can do. Now, my view was, I don't think there's 10 companies out there that are doing this. I don't think that we need to chase Joe Consumer. We should help large players. The guys like me who, okay, $20,000, $50,000 retainer, no problem. Let's go. Because I know what it's going to cost me to respond to the letter. Do you think that that one company can do all the different pieces? Because I'm looking at this going, oh my goodness, there's going to be companies built to service really small players and all along the food chain, whether it's an institution or an individual or risk management. All these tools will do the exact same thing. Like I think I have a risk management tool, audit tool, a forensic audit tool, accounting, tax, and actually can do internal risk without a massive financial team. Like right, and you can zero down to penny, 0.01, right? I mean, like extreme math. I just think there's going to be so many different companies built to service this whole industry in report, because I think we're digitizing the world. I don't think this is about money, contrary to the Bitcoiners. I think we are digitizing planet Earth, and we're going to rent everything. We're going to lease everything. Really, it would make more sense. Your car sits in the garage 96% of the time, right? So if we are moving down, great pitch for you guys. Wow, we're moving into the digital universe. I mean, accounting, audit, tax, tracking, tracing. I think it's going to become extremely sexy because who's going to do it? You can't do this on an Excel spreadsheet.
Yeah,
I don't think people understand that yet. There's trillions and trillions of transactions here, right? One high frequency trader will do 1 billion trans a year. One guy. That does not happen on Wall Street. Like that's not normal, right?
This is why we're here. We're seeing the business models being uniquely different, and the tax treatment, the accounting treatment, the controls, the reconciliations, it's all of it. And so it's taking every aspect of the normal services and insights we provide in a Web 2 world, right? And thinking about how they're different now. It's not just a little step forward, it's a big leap. And so that's why we have to immerse ourselves in the ecosystem and really understand it at a detailed level, test it, share stories, making sure that we're, collaborating with advisors and just, being really forthcoming about it. Don't sugarcoat it. It's hard.
Yeah. Yeah. But it's not going away. So no. If you can either get left out on the side of the road or you can jump in here. You're seeing a massive change, right? You're saying, is there any company not looking at this space now? I can't imagine that IBM's not looking at this and in a big way. I don't mean to use them, but is there any company just like,
Yeah, many are private about it. They might be cloaked, but I think it's unusual to have a large organization without someone at a decent level thinking about it. They're charged with saying, what should we be worried about? Should they be reporting out to the execo, to the board, and studying the impact to the business? Because it is transformative, right? Digital assets are changing things, not a little bit, but they're changing a lot. So are we in the right place in the journey? That's probably the question people are asking. And there's a fair amount of experimentation going on and also deployment.
You think we're early or late? Early, or we're not early at this point? Maybe that's just the question. Or do you think it's still too early? I wouldn't want to wait a few months personally.
What we're finding is the learning curve is not easy. Just getting started. Want the runway to do it at your own pace and not be backed into a corner because one of your competitors is engaging, right, Amy? I mean, that's where we're seeing people. It's like, it's time.
Yeah, and also to get others within the organization on board. It's
Right.
not like you just have one meeting and everyone votes and it's like, all right, now we're going to move forward and do this. It takes a lot of people to get comfortable about, have we considered all the right things and the risks, et cetera. So yeah, I agree.
Amy, if somebody wants to reach out to you, who's the right for your talent base, what you're handling for them, what space, just cover what you do, and then let's go to Rob if somebody wants to reach out to one of you guys rather than go ahead.
Yeah, so I cover all accounting, reporting, internal controls, both audit and advisory work, and across all the ecosystem, whether it's native crypto companies or just mainstream companies who are trying to get engaged.
Awesome. And Rob, where do you fall in? I just want to re-summarize it so people know where to reach out to you guys.
Everything tax related, or more broadly, anything from token launches to exchanges to new protocols, high net worth individuals, big companies. We want to cover the ecosystem, and I've got the tax lens, but I've just been in it a long time, and we make sure and connect the dots to wherever in the firm we are needed to go. And I'm easy to find because I'm the only one in Deloitte with laser eyes. How's that?
Oh, I like it. Well, I will say that Rob is I don't know Amy as well, but Rob is a massive resource. He's been very, very generous with his time. He knows almost everyone that I can imagine. So reach out to this guy and lean on him a little bit if you need some help. I've been very impressed with the team. I'm really impressed that Deloitte has moved in here with such seriousness. I quite frankly, I suspect you guys will get even more serious. One day there'll be just a Deloitte digital division. That's all these guys do. I think that's the right answer, because living in these two worlds, it's the culture is going to be very different.
It's more fun too.
It's a lot more fun. Yeah, it's a lot more fun. You guys want to close out anything? Say anything other than how great of a job I did, but you guys want to just close, say anything, any last comments, errors that people are making, or things they should be doing?
Go ahead, Amy.
I'd just say, Gary, thank you. I think the most important thing is education and getting people aware and understanding what the topics are, what are the issues, who to reach out to. So as a community and as an industry, the more people that are knowledgeable and aware, the better we are overall. So thank you.
I agree, Amy. Education stopping people. Miseducation or misinformation is stopping people from being here. Rob, words of wisdom?
Yeah, and keeping it real. I think, we don't need to dazzle or confuse people with the really hard tech stuff in the background. Make it transactional. Focus on the business. What are people doing with it? Why are they using it? How are they using it? Where do they care? And keep it at that level, because what is it? It's innovative commercial activities. Keep it at that level. We don't need to worry about how the internet works. We don't need to worry about how blockchain works. Focus on the business. That is where you focus your time, and then let it be digestible from there.
Yeah, that's awesome advice. Rob, Amy, thank you very much. If either of you guys are in St. Pete, well, in fact, you're going to get invited to a party of mine, November the 2nd. It's a little post-Halloween, post-halving, pre-election, pre-2025. Let's all get rich on Bitcoin. That's the kind of party I'm going to have in November. So save your calendar. I do throw a good party. So I do this twice a year. Some awesome people. I mean, family offices from all over the world, and even a couple of serious Bitcoin whales. So look forward to seeing you guys there. Bring your wives and husbands and whatever you're going to bring. Thank you guys very much. Okay. Really appreciate your time.
Thanks for having us, Gary. Be safe.
Ciao.